Welcome to Demand Derivatives, a revolutionary futures exchange and clearinghouse trading the world's major assets in a creative new way. Warren Buffett called derivatives weapons of financial mass destruction. The New York Times reported how a single trader in Norway shook the world's financial system. When crude oil prices went negative, a trader who started the day with $77,000 in his account lost $9 million within a few hours. Such catastrophic losses are not confined to single traders. In 2008, Bear Stearns collapsed, and so did Lehman Brothers. Markets are not bad per se. How would a farmer sell his crops if there were no markets? What then is the problem? Let's dive into some details. Here is a chart of a long futures position. During normal markets, the margin collected covers the risk of loss. When market moves are greater, excessive losses can occur. Traders' losses are not constrained to the margin amount collected. If moves are very large, individual defaults may result. And if losses continue to mount, system-wide failures are possible. In such a case, defaults don't just affect the losing side. The winning side may not get paid, resulting in both sides essentially losing. There is a better way. A way that no matter what happens in the world, our exchange will be able to pay winners, and the trader on the losing side has his loss constrained to predefined and manageable levels. The solution is a product known as RealLimit, a limited risk futures contract. These fully margined, fully collateralized instruments mean that defaults are impossible and the financial system cannot be put at risk. In addition, users will be able to select the amount of margin they put at risk, meaning that they completely control downside losses as well as upside potential. The exchange will be RealDemand Board of Trade, or RealBot for short. The clearinghouse will be RealDemand Clearing, or RealClear. The design of futures contracts has not changed in more than 150 years. Those old, outdated instruments, futures contracts, are still placed on each asset today. In contrast, RealBot will list 4 novel instrument designs: RealVol, RealDay, RealGlobe, and RealLimit. We have 8 patents and patents pending on our 4 instrument designs.
RealVol is realized volatility instruments. RealDay is daily options with an interesting twist. The strike price is not determined until the close of trading on the day before expiration. RealGlobe allows for the trading of dozens of country indices from around the world on one exchange, with many desirable features and large cost savings. RealLimit is limited risk futures contracts.
By limiting the risk, we eliminate the need for credit. With no credit extended, the clearing process is vastly simpler and much less costly to implement, allowing us to pass on those cost savings to traders. This provides us with a large fee advantage against competitors and yet still leaves the exchange a healthy potential profit margin. To get an idea of the market size, let's look at the FANG stocks. Each one is approaching $1 billion per day in transaction volume. However, this is dwarfed in comparison to futures trading, which is 10,000 times bigger. Because of their near monopoly position, exchanges have the highest profit margins of any business we know, averaging over 75%. This is especially striking when compared to other profitable industries such as market data vendors at 33% and investment banks at only 15%.
The exchange and its clearinghouse will be regulated by the CFTC. We will also apply for regulatory oversight by the SEC so that we can list futures on securities. Our technology partner is GMEX Group. They will provide the exchange and clearinghouse systems and software, including blockchain clearing. GMEX has many successful installations at exchanges around the world.
Partners include Box Options Exchange, Bloomberg, Quandl, ICE Data Services, US Bank, the SecDex Exchange, and the Hamilton Stablecoin Project. To start, we have selected 6 key assets: gold, 10-year treasury notes, corn, crude oil, the Euro FX, and a major stock index, which will be announced prior to launch. Fiduciaries such as pension funds and asset managers will be compelled to trade on our exchange precisely because they are required to seek out low-risk, low-cost providers. Other participants will be drawn towards other features such as arbitrage potential, high leverage, and guaranteed payments.
All positions at the exchange will have a maximum loss limit that users can select in advance. This is a much-needed improvement, as losses are not constrained with the current design of standard futures contracts. A second big improvement is guaranteed payments. Currently, the major exchanges cannot guarantee with absolute certainty that winning positions will be paid. They have an enviable track record, but the system has been stressed many times in the past. The third major improvement is cost cuts. Our designs and technology combine for a projected total cost savings of between 50 and 90%.
Defined risk, guaranteed payments, and substantial cost reductions will usher in a new era in exchange-traded derivatives. We welcome your participation in this exciting journey to transform the $10 trillion per day futures industry.